Magnificent Seven. We've been tracking this closely. Mag 7 led last year's rally, driving the tech-heavy NASDAQ higher by over 40% in 2023. And Jefferies is out with some more predictions to come for big tech names in 2024. Brent Thill, Jefferies senior analyst, joins us now for more on this. Hey, Brent, great to see you, and a happy new year to you here. Let's kick things off first and foremost with the perhaps permeation of some of that momentum that we had seen during 2023 for the Mag 7 into 2024. What are your expectations there?
I think 24 is going to be a good year, but I don't think it's going to be as good as 23. We think the magnitude of upside for the large cap names won't be as great. It'll broaden and it'll go to more small and mid as we see rates come lower. Hopefully the economy finds a softer landing, and that should be good for small and mid caps. And as such, our team upgraded Upwork. We're highlighting pins. There's a number of other stories across technology that our tech group is focused on. So we don't believe it's going to be concentrated as much as we saw last year in the top names, but it'll broaden out. But we do think that the backdrop of demand looks solid for advertising for the other subsectors that we cover. So we think that, again, I think just the big change is the beginning of last year, no one really knew what was happening with rates going higher and ultimate end demand. Everything kind of froze at the beginning of the year and then unfroze as we went. This year we go into everything feels good. Things are moving more normal year, and stocks have reflected a lot of that already. And so that's the only concern we have is the magnitude of some of these moves. When you look at the move that Meta had, the move that numerous tech names have had, is our only concern. When things are kind of this easy, that's when you start to say, well, perhaps there's going to be a pullback at some point, and we get an opportunity to get more energized on that pullback.
Well, Brent, let's talk about your top predictions here, at least starting with the large caps. I know you're seeing opportunity elsewhere, but within the large cap space, you've been bullish on Amazon for quite some time. You think it still has legs to go higher here. What's the driving catalyst that you see for this stock, and why it's better positioned among some of the other players within the space?
Yeah, last year we predicted Meta as our top pick, and we're proud of that pick. That worked really well. This year, every year we switch it up, so you typically don't see the same name outperform, in the next year. So Meta was last year. Amazon's our pick this year, based on building momentum in AWS, their cloud business, the advertising business, as well as continued cost discipline in their core retail business. And Amazon stock works when they're in harvest mode, not invest mode. And we think they're continuing to harvest the investments they put in the pandemic to get goods to you and I at a very rapid rate. So we are encouraged by the increasing margin structure. AWS will go from low teen to mid to high teen growth. The advertising business remains in a really good spot. So we continue to like Amazon on the large cap side. We still like Meta, but just believe the magnitude of the run based on what happened last year. A lot of that's already embedded in the fundamentals.
All right, Brent, so let's shift from the brand of the pollen-colored smiley face over to the brand of ghost face chiller here. This is one of your top picks, is Snapchat. And so thinking through this, and we were having this discussion in our team meeting this morning, is it just about time spent and the number of content creators that are finding their way to make more and monetize and increase the amount of viewership, eyeballs, impressions that really kind of matriculate throughout the platform? Or is this a story about some of the ad spend outflows from X, formerly Twitter, as well?
Yeah, I think directionally, it was obviously a difficult year for Snap. We continue to believe, and I can see it in my own teenagers' ecosystem of all their friends. They're super addicted to the Snap app. So the messaging component of Snap is highly addictive for the younger audience. And this ability to then use the rest of the platform to do advertising and other content that you can tie to as we continue to see good advertising demand across all platforms, as you mentioned. There's some outflows from other platforms like others. So we think that this will help their ability to generate more meaningful returns. We think ultimately the platform is sticky as ever for that younger audience. and we continue to believe that the overall advertising environment is solid. And it was a really tough year. So we think that ultimately there's just their ability to improve based on how bad it was is there. Now the stock is, obviously gone from 10 to 17. It's had a pretty big recovery. So a lot of that's embedded in that move, but the continuation of those trends should help the story.
And Brent, running it out here with another topic of yours, you have Pinterest calling it, quote, a rare story in consumer internet. What's the bull case there in terms of what that upside looks like?
Accelerating growth, accelerating margin, new management team, better engagement. We think, again, they're doing a really nice job in terms of the recovering. And again, when you think about the broadening of advertising dollars just from the big mega platforms, which we saw last year, to a more stable environment, you'll see those dollars shift. And I think the company's become more focused. And I think ultimately our analyst team who covers the story really believes in this new team, the focus that they have, and the engagement is going higher. And we think there's such a great opportunity. They're very, again, I'm on the platform and I find enjoyment, but I ultimately don't ever convert. And there's some things that I'll find, whether it's something for a bathroom we may be remodeling or something for the garage, but I literally can't just click on the item and do instant commerce. So we think this ability to then be able to browse and bump into something that you may intentionally be looking for something, but then you can transact instantly where you see that lamp or that faucet or that rug that you want for a room, or that those running shoes that make sense because your old ones are worn out and you just bump into a new pair. That ability to instantly move over. I mean, the same analogy is in Shopify. When you're on a Shopify commerce site, it's so easy. It's like 2 clicks and something's on the way to your door. Like what pins can do here in that kind of frictionless commerce is incredible. And I think the overall audience can build. And I think, again, I may be the only older guy on the platform, but I enjoy it. And I think there's going to be other older guys like me that will join the platform that will find joy in what they provide.
There sure should be. And I'm going to ask Brad, are you on the platform?
Look, I got to find inspiration somewhere out in the streets.
I was going to say, there's a lot of inspiration.
Brent, we got to wear new outfits every day. I got to figure out what the cats out here in these streets are wearing when they go to work.
There's a lot of valuable.
Not all of us can do the quarter zip and pull that off every day, Brent.
Hey, yeah, you look way better than I do. So sorry for not dressing up for you this morning.
I'm just trying to be like you, my fella. All right, Brent, thanks so much for taking the time here this morning, as always.
Take care.